The market's closed this Wednesday evening, December 2nd, and it's time for the weekly swing trading video. Hello, traders. First of all, let me remind you that if you're looking for extensive market commentary, you can get my comments on Twitter. You'll see that if you're watching this on YouTube in the description area below the video. You can link to that and get my market comments before the open each and every day. That allows me to focus more on the technicals of what's happening in the market and not have to rehash all the fundamental information. Right now, we can see that the market is inching its way higher. A lot of dojis. What does that mean? That means that the closing price is very close to the opening price. Doji, doji, doji. Yesterday was a doji. Had a little bit of a range today. Not much. We were able to get above that high, and this was the Pfizer news that came out with the 150-point S&P 500 spike 3 weeks ago. And you can see how the market instantly retraced. Now we can learn a lot from this bar right here. This tells us that there are natural sellers, natural profit takers. When the market gets ahead of itself, we can expect profit taking. Here we go, nice rally, almost to the high here. Boom, right back down again. This is a 3 steps forward, 2 steps backward process. 3 steps forward, 2 steps back, 3 steps forward, 2 steps back. It's going to be a very gradual rally, provided that we don't get anything blindsiding us. I don't really see any major speed bumps into year end. I think that the Senate runoff in January could be a sticky point for us, particularly if the races start to tighten up. And we have to be mindful of that. If Republicans retain control of the Senate, they only need to win one of those 2 seats, then the tax cuts that Trump initiated will be preserved, and the market would like that. That would be a market-friendly event. They're talking about a stimulus bill right now, $900 billion. That's keeping the market on a pace higher as well. So we'll see if politicians can get their act together. Certainly a lot of workers who've been furloughed and a lot of small businesses that need that aid. But again, the fundamental information I'm going to kind of be very passive on. You can get all that information on my Twitter feed. Members can also get it here at Option Stalker, and you can also see it in the chat room. So we've got this breakout. That's a nice resistance level. Now it's going to be support. This was a nice resistance level. Now it's going to be support. We've got the breakout right there. We have an upward sloping trend line. So our bias is neutral to slightly bullish. Well, there's one strategy that fits that environment very, very nicely, and that's selling out of the money bullish put spreads on strong stocks. We can distance ourselves from the action, take advantage of time premium decay. We're trying to keep those spreads inside of a 3-week window so that we can capitalize on accelerated time decay. That's our game plan. That's what we've been doing. We've got some spreads on right now, and I'm going to take a look at our positions that we currently have on. And let me move that slide into view here. And you can see all the different positions that we've been trying to put on. MRNA. This was on a video that I released last Sunday night. We were not able to get into that position. That stock has absolutely taken off. I mention this every week. When I post those videos, look at those stocks, follow those stocks, track them the next day. Those are usually excellent, excellent swing trades. Even if we can't get the spread done, you can still day trade those and you can swing trade those. And that's what MRNA did from that video. Just shot higher. Look at that rally that we had yesterday, Tuesday. That was the price action Monday. That was the video Sunday night. Monday, we never had a chance. I told you if we can't get into that spread on Monday, cancel it. We were able to get into another one of the trades that I posted over the weekend, and that was ETSY. We'll bring up that chart very quickly and take a look at that one. And you can see how that was the price action that we had on Sunday. And there's the price action since. It's been drifting a little bit lower. We sold the ETSY December 18th expiration. We sold the 145 put and we bought the 144 put, and we did that for a 20-cent credit. So 145 is the magic number on that. You can see how that's the support that we want to hold right there. It closed just above that resistance level today, so it's preserving that. We want to see this hold right here, that open of that long green candle. That's what we want to see hold. It's not unusual for a stock to break out and then to pull back and test that breakout. That's exactly what's happening right now. I like the trade. I think we're in decent shape on that one. Cisco was one that we got done last week. We sold the December 18th 4150 put, bought the 4050 put, and we were able to do that for a 25-cent credit. I know that some people actually got better than that. So let's take a look at that. We've got Cisco, really nice move higher. This one's in really good shape. So no worries on that one. Next on the list, we had Boeing. We're going to continue to try and get this trade done. Actually, let's cancel this order. We're not going to get this trade done. I was hoping for a little bit of a pullback. The stock is continuing to surge higher. Let's take a look at Boeing. You can see this is where we were last week. Stock actually gapped up, pulled back a little bit. This is where I was hoping we might be able to get filled on it. And look at the price action today. Zoom right up to that high. This stock looks like it's ready to continue to move higher. We were trying to sell a bullish put spread all the way down here at the 180 strike price. So we're not going to get filled on this. We were trying to go out to January and do it. At this juncture, it would have to back off really hard for us to get filled on that. So we are going to cancel the BA spread. I just decided that we're going to do that. Continue to go down the list, and we've got our problem child highlighted in pink right here. So let's take a look at BA. There's been news. Right now, regulators have decided that Chinese companies are going to be delisted if they do not adhere to accounting principles, and China is refusing to do that right now. So this is quite a bit of a sticky issue. Let's take a look at BA, and then I'll tell you how we're going to handle that particular trade. You can see how on that news, boom, Monday morning, big drop, and it's continued to drop little by little. Now, on the news today, I'm going to put up a M5 chart. You'll notice this M5 in my version, because I'm the administrator, has two M5s. The red one is an after hours chart. So we can see what the stock has done after hours. It's actually been trading a little bit higher after hours, so I'm not sure why. But if I take a look at FXI, which is an ETF of Chinese stocks, you can see there that it is trading lower on that news. So I'm expecting BA to sell off on this news along with other Chinese stocks. So we're going to take a look at that one more time, and we'll take a look at the key price points on it. So you can see that I've got one support level outlined here all the way down to about the 253 level. This is the one that I'm interested in right here, which is $260. That was the low from yesterday. If I hover over it, you can see 260.11 was the low, and we do not want to have that low breached. So we are going to have a conditional order. Now, when I leg out of spreads, I typically like to leg out when I have a weak market. A lot of people ask me about spreads. How do you leg out? How do you know when to do it? It's critical that if your stock breaks major support, as BABA did here, that you also have a breakdown in the overall market. Well, we don't have a breakdown in the market. In fact, if anything, the market looks like it wants to go higher. That's a problem for legging out of spreads because we're working against the market. In this particular case, I believe the news is damaging enough for the stock to continue to have some follow through selling. So here's what we're going to do. I'm going to bring this slide back into view. And what we're going to be doing is contingent on BABA trading below 260. Key phrase here, at any anytime during the day, anytime. Could be right on the open tomorrow. We are going to buy back the December 18th 265 puts. Once we get a fill on that order, we're going to place an order to sell the 262.50 puts for the price paid for the 265 puts, good till cancel. So that 262.50 put, we're going to try and sell it for what we paid for the 265 puts. The rationale here is that once that stock breaks that low of $260, it's going to have continued momentum. It's going to continue to drop. And hopefully the momentum will be so strong that we'll be able to sell our puts for the same price that we paid for the 265 puts. Now we do still have some time until the December 18th expiration, but we are going to change our bias from neutral to slightly bullish to flat out bearish. And that is a good till cancel order. If the stock finds support, if we need to get out of those 262.50 puts, we're going to try and do that. Well, hey, Pete, I work during the day. What can I do? How do I know if it's going to trade below $260? Almost every brokerage firm and every mobile application allows you to set price alerts on the underlying stock. That's what you should do. If you're an option stalker member who trades during the day, super easy. All you got to do is set your alert line. So that's really easy. And you're going to know in the chat room when we're getting out of the BABA trade. So easier for us that day trade, but if you're a swing trader, set a price alert on your mobile app. When it goes off, you'll know that you need to take action. You need to buy that $265 put back. Now, let's suppose that for some reason, Alibaba finds a bid and it doesn't go down. Well, that's okay. You've got your price alert set. I also want to have an order working that has the sorry about all of this. I also want to have an order working that buys back that spread for a 50-cent debit. So if the stock does not trade below $260, we are placing an order to buy back the spread for a 50-cent debit. That's also known as a scratch or a break-even trade. So those are our orders. This one you can have working. Set an order out there. You can place this order already to buy that spread back for a 50-cent debit. Buying the 265 puts, selling the 262.50s for a 50-cent debit. Ideally, we're able to scratch the trade, move on, get into another situation, another stock, another opportunity. And the other part of this trade would simply be an alert at $260. If that alert goes off, you got to take action. You got to buy that 265 put back. That's how we're going to handle the trade. We've legged out of a couple of spreads this year successfully, so this may be another instance where we have to do so. WKHS, there we're short the December 4th, this Friday. We're short the 18 put, long the 17 put. Let's take a look at that stock. That has been a gorgeous stock, and then now it's been a nail biter, but that's okay because we're selling out of the money bullish put spreads. We put that spread on right in here, and look at that stock go. Yippee! Well, not so great on the backside here. A lot of the EV automakers and auto suppliers are taking a big hit, but we're all the way down here at the $18 strike price, and you can see how the stock tried to finish above the 100-day moving average. I think we're going to be just fine on this trade. But as always, when you have options expiring on Friday, you must do a price check. In this particular case, if it's 5 minutes before the close on Friday and the stock is below $18, you must buy the spread back. So keep an eye on it. I think we're going to be in decent shape. You can see the stock closed at $20.43. We're $2.50 out of the money with 2 days left. I think we're going to be in great shape on that one. So let's continue to go down. KNDI, another one of those EV car maker plays. So let's take a look at it and see how that stock is doing. This stock had unbelievable option premiums. When we sold the $8 puts, the stock was up here, and we were able to sell those $8 puts for 60 cents. So our net cost on the stock would be $7.40 down here on that 100-day moving average, which you can see today the stock dipped below it, but it bounced right back above it. Now these options expire on December 18th. I hope we get assigned on these. I don't think we will, but I hope we do. I'd love to buy the stock down here. So this is another one of those stocks that's Chinese stock, could be delisted. That's not going to happen immediately, but there will be some selling pressure if this looks like it's actually going to happen, and if China digs their heels in and decides that they do not want to adhere to our accounting standards. So we're going to keep an eye on it, but I would like to own the stock down here. It's already taken a beating. I don't believe it's going to go down even further. I think it's going to be okay. We've got a lot of good news also. They're going to be producing a $10,000 car and selling it in the US, and Texas approved a $2,500 tax credit for it. So in essence, you can own a car, new car, for $7,500. So they're going to hit the low end of the market. I think this is a really decent entry point for the stock. And if we get assigned, we're going to sell the $8 calls against it immediately. And we're going to get a lot of premium for it because these options are super expensive. So that'll give us even further downside protection, perhaps even down to the $6 support level. Again, I hope we get assigned on it. We've got a couple weeks to go on that trade. So not a problem from my standpoint, because we distanced ourselves from the action. We went down to major support. I like that trade. HLT, we sold the December 18th 92.50 puts, bought the 90 puts, did that for a 50-cent credit. This one's in great shape. And some of you sold the 95 92.50. That's also in great shape. You can see that $95 strike price right in there. And you can see how well the support level has been able to hold above the $100 level. Beautiful. We like this one. This is a really nice trade for us. Those options expire on December 18th. And finally, we've got three winners. We went to the bank last week. We had a nice winner on Apple. That was the November 27 115 puts. Bought the 114s, did that for a 20-cent credit. That was a 25% winner. Really nice. We had this SPCE naked put right that we did at the $19 strike. Did that for a 45-cent credit. I believe this one came in somewhere around a 15% gain. And then we also had Qualcomm. That expired worthless, selling November 27. 139 puts, buying a 138s for a 20-cent credit. That was also a 25% winner. So we got three really nice winners in here. We've got a problem child right here that we're going to address. That one I'm going to take off of our screen and the staged order screen. And then I've got some new trades for us to take a look at. So let's see what else I've got in store for us this week. I'm going to move my staged order screen into view. And I'm going to take some of these trades off to clean up the screen a little bit. Qualcomm expired, so we're going to cancel that one. SPCE, that expired. Going to take that one off. Apple, that expired. We're going to take that one off. Then I'm going to come down to the Boeing trade, which I had mentioned to you. I'm going to cancel that. We're not going to try and get that trade done anymore. mRNA, we never got filled on that one, so I'm going to take that one out. And that leaves us with four new trades right here on the bottom. So there's a sneak peek. We're going to sell bullish put spread on Nvidia, Intel, NTAP, and we're going to try and do one on Win as well. So let's take a look at that. We'll go to the first one, and we're going to put up Nvidia. They recently announced earnings. I believe revenues were up 57%. Stock has a lot of implied volatility. AMD off to the races, so big demand for graphics card makers, which Nvidia is. Nice upward sloping trend line right here, comes into play right around that 510 level, so I like that. I think that sets up well for a bullish put spread. So let's take a look at the trade screen, and we're going to be selling the 500 puts and buying. Sell the 500 puts in Nvidia, and we're going to be buying the 495s, and we're doing that with a December 18th expiration. So let that load. December 18th. And we're going down to the 500 strike price. And there we've got the 500s, and we've got the 495s. That puts us inside of the 100-day moving average and inside of this upward sloping trend line. So I like both parts of that, and we're going to be trying to get $1. Whoops, going the wrong way on that. $1 for this one because we've got $5 between the strike prices. So when we have $5 between the strike prices and we bring in $1, we have to put up $4 for that trade. That's also our maximum risk. $1 divided by $4 is a 25% return, and we would be able to generate that in 2 weeks and 2 days. That's the type of stock and the type of trade that I really like. So that's the first trade, Nvidia. Let's go into the staged order screen. Let's see what we've got up next. Intel, December 18th expiration. Going to sell the 48 put, going to buy the 47 put. So we'll go into the trade screen. We'll put in Intel. And we'll take a look at that. And there's the $48 put. There's the $47 put. You can see that we're outside of 1 standard deviation and almost outside of 2 standard deviations. That increases our probability of success. And if you're just looking at the option chain, you can also see this black line. That is the 100-day moving average, and we are below it. That's good. So we know that we want to sell the 48 put, buy the 47 put. There's $1 between the strike prices. That means we're looking to get a 20-cent credit for that. And here you can see that spread is 17 cents bid, offered at 22 cents. I think we're going to get this spread done. So let's take a look at the stock and see why I like it so much. Intel's been struggling a bit. You can see how it tanked after that earnings announcement, and it set a low, and now we have a double bottom, higher low. You can see that upward sloping trend line right there. My theory behind this trade is, first of all, it's going to get through the 100-day moving average, and it's going to start filling in some of this gap right here. Secondly, I believe that this support level right here, where we had that breakout, we've got support there, support there. You can draw a horizontal line visually across. You can see there's major support right around that $48 level. I believe it's going to hold. That's why we're going to sell the $48 put and buy the 47.50 put. So we'll review that trade very quickly. Intel, December 18th expiration. Sell the 48s, buy the 47s, do it for a 20-cent credit. Trade number 2. Trade number 3 is NTAP. There we're going to be selling the December 18th expiration, and we're looking to sell the 55-54 bullish put spread for a 20-cent credit. So let's load that baby up. And we'll take a look at that one. 55.54. And we're going to be clicking the bid there because we want to sell that one. Click the ask there because we want to buy that one. And you can see that that spread is 5 cents bid, offered at 35 cents. Let's review the trade first. Then I'm going to review the stock and tell you why I like keying off of that $55 strike price. First of all, it's more than 1 standard deviation out of the money. I like that. So we're going to be selling the December 18th expiration on NTAP, selling the 55 put, buying the 54 put, doing that for a 20-cent credit. So let's take a look at that stock here. It came up today on the after earnings search. Big breakout here. Love that breakout. Could it come back and fill in some of this gap here? Yeah, maybe. Big volume too. So market really had a favorable reaction to NTAP. I believe that this gap is going to hold. That's why I want to be just inside of it right here at the $55 price point. I believe the stock is going to continue to inch its way higher, or it could simply move sideways for a couple of weeks while it digests these gains, but I do not believe that it's going to instantly come back down and fill the gap. I think it's going to take some time for that to happen. If it does, and more than likely, if it does come back and test it very briefly, it'll be back off to the races. So I like that trade. I think it's good. It's a post-earnings trade. That's what we like to do. Let's bring the trade screen back in and let's take a look at our last trade, WYNN. This is the December 24th expiration. And before we do this, I want to take a quick look and see Win is also listed in the US and they adhere to all of the accounting principles, so I don't think they're going to have any issues with all the Chinese news. Now, Win does actually generate most of their revenues in China, but this news should absolutely not impact Win at all. So you can see how the stock has broken through this horizontal resistance, and there's a classic example of what I've talked about. There's your breakout. Stock comes back, it checks that breakout right in here, finds support, and now it's off to the races. That makes it a really nice entry point right there. Never did fill in this earnings gap. So we want to key off of this level right here, which brings us in right around that $92 price point. I'll use the crosshair tool so that you can see it exactly right in there. And 92 is actually higher right in there. So we are going to sell a Win bullish put spread, and we're going to be selling the December 24th 92 put, and we're going to be buying the $91 put. So this one's going to expire on Christmas Eve. Hopefully that'll help you buy a few Christmas presents. Let's get the trade screen back up here and let's put in Win. And let's click that December 24th. Boy, it's hard for me to even take a look at anything that expires on December 24th. It seems so far away, but I know it'll be on us very, very quickly. So we're going to go down to the $92 strike price and the $91 strike price. So I just need to confirm that that's the trade. Yes, 92, 91. So we're going to be selling the Win December 24th expiration. We're going to be selling the $92 put. We're going to be buying the $91 put. And we're going to be doing this for a credit of 20 cents. $1 between the strike price. That means we have to put up 80 cents for this trade. When we bring in 20 cents, that means that 20 cents divided by 80 cents represents a 25% return. This one's going to be 3 weeks and 2 days on that spread. But I like it. We're going to have to take a little bit longer time on this particular spread because I'm really trying to get down to this breakout point. You can see the stock's all the way up at $106 right now. So we're going pretty far out of the money on this one. That increases our probability of success. And if I go, you can take a look. You can see that we are through that one standard deviation move right there. So I like the Win trade. In general, I think that we need to be a little bit cautious on the market right here. That's why we're selling out of the money bullish put spreads. Anytime that the market has gotten ahead of itself, we've seen a retracement. I believe we're going to see a little bit of a pullback maybe in the next week or so, but we've got plenty of cushion on these trades. So that's what we've got for this week. The only thing we really need to be mindful of is Alibaba. That one's getting a little bit tricky for us, so we're going to have to watch that particular stock. And again, the price point on Alibaba that you really need to be aware of is $260 right there. If the stock is below $260, we're going to be buying the December 18th expiration. We're going to be buying back those 265 puts, and the 262.50 puts we are going to be trying to sell at the same price that we paid for the 265 puts. That target on the 262.50 puts is a good till cancel order. Put it out there. If I need to make any further adjustments to that position, I will do so. So, when we got that many positions open, we're bound to have a problem child in there somewhere. Last week, you remember, we were dealing with Apple. That looked pretty ugly. It was right in here, and we were short the 112.50 puts, as I recall, and started to get some nervous numbers. And then look what happened. Boom, right back off to the races, which Apple, incidentally, looks pretty dang good. Thanks so much for watching. That's all I've got for you this week. If you're watching this on YouTube, I post this for my members Wednesday night, and that gives them an opportunity to enter the trades on Thursday. I post it to the public on YouTube Saturday morning. Lots of great educational information here, how we find the trades, how we structure the trades. So there is still a lot of good, valuable content in it. I hope you like it. Thank you, everybody. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.